Hey everyone, I'm Charting Man Dan with the Chart Guys. I'm joined with Chart Guys Lamont. Many of you already know him. His specialty is volume profile. It's a different subset of technical analysis. There's certainly overlap with my style, but it's a bit different. And in this video, we're going to be checking in on some of the hype sectors, cannabis and crypto, which many of you are certainly following along as well. What's up, Lamont? Want to give us a little elevator pitch of what volume profile is?
Yeah, sure. So volume profile is really just shows you the distribution of volume across an area. So if you highlight it on a chart, typically what we're trying to get done is we're looking for areas where the market was pretty much kind of boring, didn't really do much sideways trade. When that is the case, well, then if there's a lot of two-way trade, everybody thinks this is more or less fair price to do business, more volume is done there. The more volume is done there, the more value is perceived there. The more value that's perceived there, the more interest there should be next time you revisit that area. So if you balance and then you break out, what must have happened, right? In that area of balance that you just broke out of, that must have been net demand, right? And if you balance and then break down, what must have happened there? That must have been net supply, right?
So that's essentially similar to how when I do this in my videos, when I'm talking about the old school scales of supply and demand, when they're nice and balanced, we're trading sideways, the market's agreeing on a price, and inevitably we know volatility is coming when that range breaks one way or the other, and that helps us determine the next move, whether we're going up or down. Let's get into the charts. If we want to pull up, let's start with crypto. We'll look at Bitcoin, Ethereum, and then we'll look at one of the crypto stocks, CLSK.
Sure. Okay, so Bitcoin honestly is a really great example of like the value of this, right? So what you kind of want to do is just look to your left, right? Like the only thing that we have as technical traders is our references, right? All we have are references. So for me, the only reference I use, you'll see in my chart, there's not many tools on it. I really only use these volume profile tools because all I'm trying to trade are these areas of supply and demand. So for example, we know that this balance over here, I'll just zoom in on it. And you can see how this is pretty much sideways trade, right? We're just not really doing anything. We're not trending at all. And then we break down. This must be net supply. You can see how when we break down from it, these highs are roughly off of these lows. Why? Because if you break down from an area of supply, the first thing that the buyers would like to get done to negate that breakdown would have to be to get acceptance back into the area where they just broke down from. If they can't get back there, like they fail here and they fail here, if they can't overcome where the most volume was traded, the point of control, then then the majority of these sellers here must be affirmed, right? And so lower prices will happen, right? As long as you cannot overcome this high volume area, right? So this is a very, very notable structure from back in 2021 because this was sitting at all-time highs, right? And so we know then that as long as this supply is resistant, then of course there's not going to be new highs. And so if you scroll out and we come back here, here's that same structure, and you can clearly see how reactive price is being off of this, especially this point of control. If we were to zoom in intraday, multiple hits, multiple tests of this point of control, sellers are trying to get through it. And if they don't get through it, well, what does that suggest? That suggests that higher prices relative to that old structure that was sitting at all-time high, they're being accepted, right? Higher prices relative to the old structure that represents the record high being accepted. And so as long as 61003.36 is supportive, then these buyers are okay, bigger picture, right? So I'm still watching this because it's a very, very clean EQ. This is like pretty much as good of an EQ as it gets, right? It's an EQ sitting on top of an all-time high. So do we know it's going to break out from here? No. But do we have a really good idea of how to assess who's in control? Yeah. As long as there's no acceptance under here, these buyers are okay, bigger picture. And the beauty of this is you can just simply look left and you see how this shakes out time and time again. So the first time we break down from that record high supply here, where we pause is here. And so you'll notice then that if you look to the left just a wee bit more, here's another area where there's balance, right? And so you break down here, you come test this area of balance, and this guy is pretty much representative of these major lows here. Because if you trade under here, this is pretty much one-way trade, right? It's not a lot of two-way trade here. So the sellers should have an easy go at it, just like they did over here, right? And so this idea comes that, okay, so what are we doing over here? We know this is key demand, this is key supply, right? And so, okay, you break down, balance, break down again, this key demand holds. And so what do these buyers have to do to negate this breakdown? They got to flip this guy. If they can't flip this guy, then what are they going to try to do? They're going to try to crack this guy again, right? And so you have very, very clear areas, objectives of buyers and sellers just based on where there was acceptance before, right? Because the market needs to work through these prior areas, right? There are sellers here. There were net sellers here. And so in order for buyers to overcome that, they have to absorb all of that supply and then keep buying, right? It's the opposite is true for demand, right? They were
All
buyers.
right, so to stop you real quick, so we got the sideways range of when we start seeing range bound action. The purple line is a point of control, which is essentially the highest point of volume within that range, correct?
Correct, yes.
And so you could say that the point of control is the most important aspect. You know, you got your broader range, that's the most important aspect.
Mhm.
And if you zoom out to where we are right now, we are essentially building, you know, if we break bull from here, will you walk that range up because we will have essentially a new range just above the previous one?
Yeah, that's exactly right, right? And this works on all time frames, right? Just like the multiple time frame analysis, you teach with the 12 EMA or whatever, or price action trends. It's the same concepts, like you'll see this kind of price action on every single time frame. It's all fractals. And so, yes, if we break out from here, then we can draw up this fella here because we know that this trend is fine as long as this structure is supporting price, that's just how trends have to work, right? You build a sideways structure, you break out, you back test it. If you can back test it successfully, then they'll break out again. Right? It's just sideways higher, sideways higher, sideways higher. And you can also get a good sense of how strong a trend is based on how much gap there is between these areas of balance, right? Because if there's a huge gap, one-way trade here, right? Well, what does that let us know? These buyers were very excited here, right? And if these sellers can't get back to the next area of balance, they really prove nothing. It's no different than breaking out of like a breakout point, right? Like if you don't, so here's the prior high. Right? And these buyers, they break out of that prior high here. And if these sellers can't get back under the prior high, what does that tell you about these sellers relative to this breakout, right? They're not strong, So you use these very clear horizontal references. I like horizontal references a lot because, diagonal references, they can be easily affected, right? Two pivot points can drastically change the slope of a line. Or if you're on log or linear, for example, it's a there's less like wiggle room when you're dealing with just pure horizontal levels.
Yeah, big Ched's good follow on Twitter. He is definitely all about horizontal and does not like the diagonals. So there's some similarities with that style. So on the right, the what you're seeing the peaks there. That's the volume being represented on the y-axis. And for people that want to play around with this, what indicator would they be putting on their chart on TradingView?
Yeah. So for trading, we just go into technicals and then profiles. And then here's the ones that I use. So the session volume profile, you're not seeing that right now, but the fixed range volume profile are these guys. That's when you draw it manually. You'll pull it across an area of two-way trade. It's going to look like this guy. Here, I'll just delete these. It's going to look like this guy. And then I just draw a rectangle and a ray on top of it so that I can see these references further out so that I can use them. I don't know why TradingView won't let you extend it without actually keep pulling data, but it's what it is. So, oh, right, the value area. We forgot to talk about the value. The value area are these two blue lines, this blue area. And that's where 70% of the volume is traded around the point of control. So why do we care about that? We care about that because that's where the largest chunk of volume is, right? And so we know that as soon as the big chunk of volume starts, right, because this is not a lot of volume outside of it, especially under it here, right? It's not as much volume as this big block here. So we know that these buyers or sellers are starting to get serious if they can get into the big chunk, but it's really the point of control that we care about the most. The reason why we care about the value area though, is it's a really good reference because if they come in and back test it, you crack the value area, right? But you can't get to the point of control. Again, what does that tell you about these sellers, right? They're not strong enough to overcome that point of control again. Right. So it's a nice reference to just get a good idea of again, assess how strong or how weak buyers or sellers are based on how effectively they're getting to that point of control.
And would you say generally, let's just use this example, we hold the sellers fail initially to get back within range, and then when they finally do, it's on high volume. Do you find that you need that high volume to crack the volume range?
Typically, yeah, right. It doesn't have to be the case, right? But typically, yeah, right? Because you're getting a lot of volume built in this area and everybody's agreeing. And so it's like that seesaw analogy or the scale analogy, right? Let's say it's like a seesaw with buckets, you're going to need, and it's just constantly going back and forth. What do you need, right? To spill one side, you're going to have to fill up one side with more water, right? So that's pretty much how I look at it. Yeah, you should ideally you'll have, good volume coming out of these structures. And usually you will see that because it's compression here. What's going on here, right? People are agreeing this is more or less fair price to do business. As soon as those scales tip, right, what happens? You attract other operators, right, who have the same sentiment, people like you and I, who might jump in later. I do that play all the time. The pass over the point of control. So for example, like I love these plays. If you come down under the POC and then I don't love it when it's bouncing like this, but if you're coming down into it like this, right? So you're drilling back down into this level. You see this level gets tested. If it's already been extended on the way down here, and this is, potentially a bear flag with no follow through, once you see this crack and you move back over it, right? That's the buy. You throw your stop under here. Whether or not you're correct, who knows? But the asymmetry of this setup is immense, right? Because let's say you get a sloppy entry, that's 2%. And just getting to the highs of this local range is 5.5%, right? So that's a 2R trade just to position, right? So you position, chop it up, throw your stop under here. If you stop it out, it's all good. Rich G has been killing these plays. One of our Swing Report subscribers. Shout out to Rich G, I guess. But yeah, he's making me feel FOMO. Like these are my ideas. These are my ideas. And because I'm busy doing stuff, right? I'm not getting them as frequently as he is. And he's just gallivanting right now in Scotland or Ireland or whatever with all these swings on. And I'm over here grinding away at these day trading. Yeah.
So where we stand in the current range, going back to right now, we can say that it favors the bulls because we're standing above support. So we would say that if we had to choose, we would guess a bull break is coming here, but obviously we know it can go either way. It's just a question of probabilities.
Right, yeah. So I would say it's more so like we should just keep playing bullish. Like we don't have to anticipate a bull break, right? But we can keep looking to fade these breaks under the point of control, for example, that don't see follow through. Like if you were to have used that in any one of these setups, there's not even a stop out here, right? Like if we zoom into this, right, these setups, so we don't have to anticipate, right, that there's going to be a bull break, but we can play assuming that we should be playing with the buyers as long as this structure is supportive, right? Because that's for two reasons, right? First of all, we're still just trading sideways and higher, right? If off of this low, sideways, higher, sideways, higher, sideways, higher, sideways, higher, sideways. So there's really no problem on this trend right now, right? And so additionally, we zoom in, we remember that this structure was that key supply, that prior supply sitting on all-time high. So we know as long as we're over it, these buyers are comfortable. So we can just keep our bias. Like you always talk about eliminating one side of the trade. It was really hard for me for a long time to do that until I started using this approach. Because as long as we're building sideways and up, okay, I'm going to stay buy focused, right? And so if we use these same exact tools, we zoom in, we don't have to stay on the daily. You can see how much detail you'll get. So here's that same structure. And all of these passes under the point of control, if you were to have bought them, even this one, right? You see this move under it, right? And then you move back above. Okay, you buy that move back above, throw your stop under here, chop it up at the value area high. You can do that over and over again, right? Because you don't even get stopped out here. There's plays for you over here for that same exact concept. It's the same exact setup. And the first place that you want to chop it up is the value area high. The next place is the prior low. You get both of those on this hit as well. And then over here, I mean, it does not get more asymmetrical than that, right? Like you probably stop out here. You probably make plays here, trying to leave here, stop it out. But the asymmetry on this, you could be all in on this, right? And it's really, and the liquidity in Bitcoin, I mean, it depends on time of day, probably. It should be okay for many accounts. That's less than 1% of risk. Whereas the gain just to get here is 3.7. The gain to get here is 10%. Why do we have this guy marked up? Because this fella over here, now we're on the hourly chart. So that's this blue box is drawn on the daily. Well, when there's a white box, usually I'm on the hourly. And you can see how the same exact concept applies. You build a sideways structure here, you break out, you balance, you break down. Okay, you can't get to the point of control. That's a notable failure. You move over the POC, you buy that. You move over the value area high, you buy that, throw your stop under the low and try to get back here. Right. And this is going to shake out time and time again. Like this kind of thing is going to shake out time and time again. No different than here, right? It just becomes a matter of, can you be patient enough, right? Can you be really vigilant and patient and wait for these kinds of setups? It can be hard because you know how good of a setup it is, though. It's helpful to be more patient, but it's still hard. You know how it is. Like
So trading similarities with my style, if I'm playing a bounce, I'm making an entry, I'm selling partial at, EMA 12 resistance on the hourly, I'm taking a third or half the position off. Same concept, except you're doing it at the value area high.
Yeah, right. Because I'm looking at it from my perspective, I want to start my exits where my team might start failing, right? I don't know that they're going to succeed. So I always start taking my exits where they have the potential to fail. right? Usually it's before it. And in futures, that has played out a lot, right? There's very often when you're trading, when you're day trading futures, a level like the overnight high or the overnight low, they'll miss it by like a point or two, and that can be the most frustrating thing because for a long time, I was using that level as a target. I only want to get there. And it must have happened dozens of times before I realized it's not worth fighting for a point, like let me just come out a little bit earlier. Yeah.
And when you say asymmetry, you just mean a setup where your reward is multiple times what your potential risk is.
Yeah, right, exactly, right. So for example, then if you're like, let's say that you did, I don't know, like one of these, right? So you see this move under the point of control, no follow through. Let's just set it up, right? If you buy that pass back over the POC, that's 2% stop, right? And you're trying to get to, or actually you should be trying to get here first. So that's about 1R. So you get risk free there. If you look to chop it up here, somewhere before there, throw your stop under there and then see what the market will give you because you never know, especially in this situation where we're in a blue sky breakout. The RNDR trade that I did was really great. It worked out really well. I mean, obviously things are changing now, but it was a really late location trade. Like it allows you flexibility. So I bought this move back over it, which is a crazy move, right? Because it's a 26% stop, but still the environment at this point, this was blue sky, right? And if we're coming to, come break down here and you fail this, what does that tell me, right? Like that's a notable breakdown, but they didn't get the job done. Right. And so all things considered, it's a very strong looking chart. I thought it was a very reasonable, aggressive buy. And I was just dipping my toes in crypto. So I was okay with, being in. So I'm trying to practice the lessons that I learned from my first crypto run. Right. Now I get it. Some part of it is just holding on for the hype ride, for at least like some kind of core, because that can blow up like my wife, who is literally still in her Ethereum. That's like, double digit purchases. So good lessons for for this guy.
Yeah.
And I remember, a lot of those gains were just like, riding that hype. And obviously I learned that from you. And so, but back then I gave a lot back because I didn't understand, right, how to be protective, right, and how to size appropriately. So now this time around, I'm trying to size appropriately, right, make sure that I'm being very, diligent with the stops and whatnot.
Speaking of ETH, let's move on to it. Obviously, very similar to Bitcoin, but there is relative weakness comparative to Bitcoin. I believe ETH BTC just recently hit the lowest level in a significant period of time, showing that it is continuing to underperform.
Yeah, right. So for Ethereum, then you're just, this is the key supply, right? You could draw it as one really large one. I had it as a small one just because I saw this tiny little step here and I saw this was happening. Oh, I'm sorry. I marked this guy up because this guy over here, this move down, they try to hold off of this structure. They're trying to balance here and then lift off from here, right? So that's where they failed last. And so the way that I see it is, you want the buyers now that they've broken down from here, they want to pick up where they left off, right? And so far, you can see again, so here's that step that I'm talking about. They try to hold it and lift off from here. They don't. You trade under it, and now it becomes problematic. It creates this big old structure here. So you come back around, and that's pretty much the battle going on right now. So if you zoom out, right, you have this guy as well. Honestly, it's probably better if I move it down here. The reason why I selected this one is because they try to make these lows here. So the way that I see it is if they can hold over this structure, then we should expect this kind of price action right now. And I've got these fellas marked up just to assess how well these buyers are making it to this really key guy. This is the super key supply here, right? This is that Bitcoin equivalent, right? The Bitcoin structure, this guy, right? This guy. If Ethereum can get over its structure over here, then that's the best case scenario. And so if we zoom in, you can see how it's a clear battle for these areas now. And so from here, we got to pay attention to this, right? Because as long as they're holding over this point of control, 2570.27, this structure is being affirmed, we should expect this kind of price action.
So essentially, if we can't turn 36 into support, then we can look for a move down towards 2800.
Yeah, it's got to be that, right? If not back over this fella, right? If not higher highs over here, where are they going to go? They're going to try for lower lows, right? And we don't know if they'll succeed, but if they do make lower lows, where are they going to try to go? They're going to try to go where there was a lot of balance last. They have to test this area, right? The sellers need to see, can we crack through that, right? And if they can't, the buyers want to see it too, right? Because if they can't, what are the buyers going to do? They're going to step right back in.
And so the biggest difference between the two is Bitcoin broke above its key all-time high and now has it trying to hold as support, whereas ETH failed and it's still acting as resistance. And that's a big reason why there's relative weakness comparatively.
Yeah, yes, sir. And I mean, you just look at the ETH BTC chart and these concepts are here as well, right? Like there's just an area of this breakout, right? So we know, all right, well, if Ethereum breaks back down, the ratio chart breaks back down under here, okay, that's a pretty big red flag, right? But if we continue to just balance over this big guy, then these guys are essentially in defensive posture, right? They're not advancing, but they're also not receding back into where they just broke out of. So for me, this is just like a holding kind of a pattern. We'll see if, Bitcoin consolidation leads to a little bit of, alts, hopefully, right?
So it's pretty important over the next, we'll just say Q2 2024. It's pretty important that ETH BTC were to get a weekly bounce going from this zone sooner rather than later to try and hold it yet again.
Yes, sir.
All right, let's move on to miners CLSK. I don't trade personally CLSK as much as Riot and MARA, but definitely started to pay attention more as its relative strength comparative to those two started to shape up. It did recently weaken against those two because it had dilution news, and dilution news in a stock is a great way to just suck bull momentum and relative strength out of a stock. But the reason I'm keeping an eye on CLSK right now is because there is a very clear support zone that is being tested yet again.
You could probably hear that bird, right? I don't even know what kind of
No,
that is. You can't hear it? Oh man,
no.
it sounds so wild. Okay. All right. Um, it's so funny. It's yelling. Okay. Yeah. So this is a very notable, right? You have this key supply. This is key supply, and it's not the all-time high supply, but it's a key supply that was becoming problematic over here. They failed to come back to it over here. And you have this key area of demand that has tried to hold many times over here, right? And so you'll notice these highs made pretty much right off of the value area high. And that's not a good look, right? But at the same time, you'll notice, all right, well, are they getting back here, right? Because this is the breakout point, So that is obviously not good. But at the same time, as long as you're not under 13.56, then the higher prices relative to this breakout still being affirmed. So I think it's very reasonable to be looking to fade this move here, assuming the overall market stays strong, because, that the Thursday session was potentially a warning shot, right? Like the Thursday session was, a that's probably larger operators, right? Like that's probably larger operators. So that I feel like, earnings season is right around the corner. They're probably repositioning, probably, risking off a little bit. So definitely a warning sign. And you'll notice on the SPY, the high of the day was made right off the point of control of this key supply. The low of that session was made up right off the POC of this supply. Like I mean, of this demand, right? Like, because that again, that has to happen. They have to trade through these areas. And so if you have a clear reference, like let's say it's a forward or whatever, right? What is the key area, right? It's probably the highest place, right? And so if that's not taken, then you have the potential to continue to defend. Like, how those forwards had like those levels, and all the lower ones were like kill zones, right? So it's the same idea, right? They have to trade through these guys, and if they don't, they prove nothing. So for CLSK, then I think it's very reasonable to be looking for the potential that you don't come back down here. If you don't come back down to this point of control and you move back over the value area high, 13.56, it's probably a move back to this, like this, right? If you see this, no follow through down to here, and then move back above, you probably snap back to here. If that's what the buyers would want to do, at least, right? Do we know that'll happen? No. Can we position? Yeah. Is that probably a low risk trade? Yeah. Because even though chopping it up here is probably not that much R, if you do overcome this, where are they going to go? They're going to go to at least test these highs, because that's what happens in balance, right? You just test one side, you test the other side, test one side, test the other side. And if you don't leave and you come back in, you should expect that other side to be tested, right? Lower low, no follow through, test the other side. Higher high, no follow through, test the other side. That's balance.
And so that's essentially a concept of wedges as well. When you see a break with no follow through in both directions, that's why you get those moves that seem nice and extreme, but they're just working through an area where they're trying to find that point of no, not point of control, but the value area high or low.
Yeah. Yeah. Essentially, like the rising wedges into these levels, I love those plays, right? Because the market is already telling you it's struggling to get over there, and so you have a very clear reference. Like struggling is just part of it, right? Like you see, okay, these buyers, their higher highs not getting that much follow through, but what about location, right? How do you trade that? Like trading a rising wedge can be tricky, right? Because it's a higher high, right? And then you get those lower lows. So how do you set the stop, right? You have to be pretty nimble if you're going to be really active, right? You're looking for that roll back down under the prior high, probably if you're trading a wedge kind of that's how I do it at least.
All right, let's move on to cannabis. Let's start with CGC, which is the higher volume name and higher listed. So definitely a lot of volume, volatility, and opportunity.
Cool. So again, another really clean POC test, right? Like here you have a few sessions of sideways here. You know it's going to be super key. You know that this guy is super key demand because they try to trade through it here. They do get through it. They reject lower high and lower low, but you don't see follow through. And then again, if you zoom in, look at the battle for this major point of control because again, they have to flip it. So the sellers are going to take a stand there. They're going to at least try because they just broke down from here. What do the sellers want to do? They want to go to zero. So if they lose this major reference, then they're not going to zero, right? And so if you trade above it, again, you rush to here, right? You can clearly tell it's been responsive in the past. And then where are they going to try to get to? They're going to try to get to some key supply, right? They trade through all of this and you can see where it starts getting choppy, right? Where is this pause? This pause is right here. So they trade through this. They probably squeeze like this violent move out is probably because all of these folks were squeezed, right? Like this is all one-way trade for the most part, at least. And so you squeeze all these sellers out. You squeeze all of these sellers out. Then if you can get over this high, it's got to be squeezy because this is a gap. This is a gap and pretty much all one-way trade. So when you're looking for like a squeezy plays, just look to your left, right? If there's a whole bunch of one-way down and then there's a battle at a key level, if they get over that key level, it's squeeze time simply by looking at what happened here, right? These are all folks who just went one way, sell, and so they're all going to have to close. And if you see that, where do you have this major high for now, at least, is this area of supply. It's right off the point of control again. And so if you reject from here and we see lower lows, it's back to eyeing this because that's just how it works, right? Where if we're over here, should be here. If we're under here, should be here, right? That's just what the market has told us. I'm not picking it randomly. I'm just the market told us, okay, it's a battle for these guys, you know?
So essentially, if we keep the daily uptrend and hit a higher high, we're looking towards the $14, $15 range as the next leg up.
Yeah.
And if we lose the daily uptrend, we'll see all the volume spiking between 7 and 8 there. That would be essentially the first level that we would look to see if the bulls are able to maintain. And if not, then we're looking back down towards the $6 range.
That's how I would look at it, right? Because this guy is where you have the first pause, right? So here we have this fella, and as long as you're holding over this guy, then they're probably going to keep trying to crack this, right? So I just take it sequentially, one step at a time, right? So if you lower low here, and you trade through this guy, then it's probably back to here, 522. Yeah.
All right, let's go to MSOS, the ETF on the US side.
Sure. So MSOs, very, very clear, right? You have this guy here, this little bit of balance is sitting at the bottom of all of this, right? And so we can safely assume then that if they trade over here, they're going to try to come back here, just like all of this hot mess over here. Again, structure told you was important. Very meaningful reactions here. I've got this middle guy marked up because I want to know, like this, if you're going to pop over here, this should be squeezy, and yet it's not. So what is the problem, right? It must be back testing these areas. So if you look to the left here, you can see they tried to step up on this and then they failed to get to this over this guy, right? And so you look to our right here and it's being very reactive here. So the way that I see it is it's a battle between this guy and this guy.
I wonder if, that dump there is news related in the sense that there was a lot of hope and expectation for safe banking, and we essentially got told it's not happening anytime soon. And that led to that massive sell off, which obviously, just went right through all those zones. And I'm wondering if knowing that it was news related, looking into the past, could say, well, maybe we should look to the levels prior to that news reaction to see where important levels will come into play in terms of resistance.
That's a much better way of presenting it. Yeah, thanks. But I mean, yeah, if you zoom in, very, very clear hits, right? Very, very clear hits. We know, again, the key structure is this, right? As long as they can hold over this guy, we should expect this. They're going to try to do this because that's where they fell out of, right? You hold here, come here, right? And so if you hold over here, they should be trying to come here. This guy's in the way. And again, you'll see very notable hits off of these POCs. So again, if you're just sitting, and I pointed this one out to the chat room. I didn't take the trade, but I pointed this one out because I know it's going to be important. The market told us this area is important here. I don't know what's going to happen, of course, but if you're ready for it, that's such an asymmetrical setup, right? Right? Like there's no risk on that. You watch it, and if you zoom in to like the 1 minute, you can see there's actually many plays for it. Like if you're a day trader, okay, pop and drop, sell that, stop here, chop it up at the next area of balance. You can do that over and over again.
Yeah, I was watching that battle. Someone was definitely reloading the ask at 1093 and leading to some distribution taking place. And then once we broke 1083, which was the the low of that little 1 minute range, that's when everything changed on the day. So that was essentially just a mini pocket, 1083 to 1096. And then once we lose 1083, it's a clear move down to wherever the next level is. But essentially, I'm just referencing the cannabis video that I just made. If you go to the 4 hour time frame, my anticipation of what we just saw is to tighten up now the next 2 days. Look for the 4 hour lower high, then the higher low, and that's essentially just ping ponging in between the two value areas that you've created there. And then the direction that we break that anticipated tightening range is going to give us a lot of information for the second half of next week.
Absolutely. Yeah, I totally agree with that, right? Because again, it's there, you're right back down here. So this is super key. It's clearly been a battle for it. They need over 1092, right? Hold over 937 is a good defensive look. Over 1092 opens up this, right? They should be trying to come here next.
All right, let's go to TCNNF, major Florida player. And my question is, there's a lot less dollar volume and a lot less liquidity because we're traded on the OTC. And would you say volume profile analysis works just as well as something that is trading, $400 million like CGC, something only trading maybe $5 to $10 million on TCNNF?
I would say it still works. Like the concepts are still the same. It's just there are some caveats to that, right? Like for example, if it's a lower volume, right, then you need less volume to break structures, right? So if some kind of news catalyst hits, a lower volume name is more likely to crush through prior areas of supply and demand. I would say that's probably the biggest difference. Otherwise, yeah, you can't escape this. This is simply market dynamics, right? Like if you have a certain amount of inventory that you're trying to sell for a specific price, right? Well, what's going to happen here? You have to find buyers for that, right? And it's only unless people keep buying up that inventory at that price and you keep running out of it, then you'll raise the price. It's no different than any other market. It has to work like this. Is it going to work cleanly, right? No. Is it like some kind of, what do they call it? Like a Rosetta Stone or whatever, Philosopher's Stone? No, it's not a magic thing, but it's a concept that plays out in every single market. And so if you understand this concept, you can leverage it, right? Like it can pick your location. Really, that's the biggest thing. Location selection is the biggest thing for me with VP, right? Because so much about trading is just getting asymmetrical setups. And waiting here, just lying in wait here, can give you some incredibly asymmetrical setups.
So yeah, that's technical analysis 101 is we are not predicting, we are positioning ourselves in what we feel is more probable scenarios, but most importantly, we're positioning ourselves where we have low risk and high reward, where if it doesn't work out, okay, no biggie. And I can have 3 failures, but if my risk and reward is aligned correctly, the one success will offset those 3 losses because I kept a nice tight stop loss and a nice tight risk reward scenario.
Yeah, right, exactly. Shook out. Perfect example on Friday's morning stream where I made a couple attempts at an RTY sell, and then I talked about what the ideal situation would have been. There were fails, and then I already had an ES buy on, but still, I was trying to get the RTY sell. I laid out exactly, what I would like to see, and then I started doing tickers, and I missed it, right? But that would have been the one because it was way more. It was like a 1.5 point risk or something like that. So it would have easily recouped the 2 failed attempts or 3 failed attempts. I forget. They weren't complete fails. It was like chop and stop. So break even trades. But that's the name of the game, like you got to stay on it because if your idea is still valid, it's a huge shame to let it go. You just have to manage your risk appropriately. If you still have risk capital left to try to trade that idea, you should stick with it because you need those wins to make up for the failed attempts.
All right, let's zoom in a little bit here. So the key resistance zone up ahead is in the upper 14s to lower 15s.
Yeah.
And in terms of support, so what you have drawn up here, we don't really have a whole lot of support with where we currently stand. I guess looking at just the volume profile on the right there, right around $10 would potentially be the first level to visit on the way down.
Yeah, I think we could very easily be looking at something like this, right? And that's why I have this guy marked up because this is a little bit of an EQ here. And then after they break out of it, this is the structure that you really get this big lift off of, right? So the market told us in the past it's important. And so we look over here and market tells us again, okay, certainly it's important, right? These buyers are having huge problems getting over here. Where are these lows? These lows are made pretty much off of these lows without seeing follow through. So if we come back over it, I got this guy marked up because if we don't trade under this, then you don't come down here. If you don't come down here, then you're staying within this, right? So again, the market decides like which ones I'm paying attention to. It'll affirm its meaning or not, right? And so as of right now, this trend is honestly still okay as well, right? Because the breakout point is here. And so if we see lower lows, but you can't get back down to 10.73, not a big deal, right?
All right. Well, I appreciate your time, Lamont, and for explaining everything. And for those who like this style and want to learn more about it, Lamont runs our Swing Report, which is a subscription service in terms of highlighting trades, entries, and exits. Every week that goes out, and he also puts out a weekly video on our YouTube channel where he's checking in on the most popular things: Bitcoin, the cannabis space, the broader market, and those are worth keeping an eye on as well. Again, trying to it's always important, when you're learning technical analysis, poke in and see what Ichi clouds are about, see what Elliott waves about, and just, see what style resonates with you because, there's plenty of people that I have taught my style to, you being one of them,
Mhm.
and, they take pieces of it with them, but it always morphs into something that's, customized to that individual. I don't think, anybody that I've taught trading that has gone on to be successful does it exactly the way that I do it. So, that's something to keep in mind for everybody that is trying to learn as well. Would you say that's accurate?
Oh, for sure. For sure, right? Because you have so much freedom in the market, right? You can literally do anything, right? You do options, you futures, debit spreads, whatever, credit spreads, whatever. You can do whatever you want, right? So you need to be the one to create the structure, right? So you have to have confidence essentially in it, right? And if you're learning from somebody else, they have confidence in what they do because they've worked it over and over again. They'll ride the hard times. They know what it's like. You don't have that experience. So you need to develop a system, right, that you can have trust in, that you are willing to fail with. That's the key, right? Like people are always, trying to be right all the time. You don't get anything from, first of all, it's impossible, right? And you don't learn anything from being right all the time, right? You gain confidence from surviving being wrong with grace. So and then you retool things, right? Like okay, I try this thing that this fella taught me, it's not working well for me, but I have this concept that when I add this nuance to it, it gives me a little bit more confidence, and then you just keep going from there.
All right. Thanks again, Lamont. Have a great rest of your weekend.
Cool, thanks, Dano. See y'all soon.